Realtor, your favorite realtor and investment property strategist. Welcome to the monthly housing market report where we discuss home prices and appreciation, mortgage interest rates, housing affordability, and current real estate trends. We also take a look at the economy, jobs market, rate of inflation, and whatever else may be going on globally or politically that may impact the way we buy and sell real property. In this month's report, we're reviewing the housing market outlook for 2026. We'll touch on the nuances of navigating the market as affordability continues to be a stumbling block for many. We'll also touch on how you can turn winter woes into wins if you're in the market to buy a home. Let's begin. Let's start with housing market trends in Metro Atlanta. We're taking a look at single-family detached homes. Pending sales 2,531, actual closed sales 2,732, days on market 46, average sales price for single-family detached $564,569. Sellers are receiving 97.9% of their asking price. Month supply of inventory 3.9. So big picture, supply is rising. Inventory increased 15% year over year, pushing month supply of inventory from 3.3 to 3.9 months. Now, this does signal a shift toward a more balanced market, yet it still technically favors sellers. As for buyer activity, it is slower. Pending sales dropped 16% in November and are down 2.5% year to date. Closed sales are also down, reflecting buyer hesitation and affordability pressure. Homes are also taking longer to sell, with days on market increased from 40 to 46 in November. Year to date, homes are selling 27% slower than they did last year. As for prices, home prices for single family detached are holding steady. The average sales price rose 3.2%, indicating strength in higher end or move up segment. Sellers are receiving about 98% of their asking price, showing pricing discipline. As for condos and townhomes, pending sales 703, actual closed sales 693, days on market 57, average sales price $406,219. Sellers are receiving 97.5% of their asking price. Month supply of inventory 5.6. The big picture, inventory is growing faster in this segment. So for condos and townhomes, they are currently experiencing a higher supply of inventory when compared to single-family detached. Inventory increased by 19% year over year. Closed sales also dropped about 19% in November alone. Year to date, sales are down for condos and townhomes in Metro Atlanta by 6.4%. Homes are currently taking 27% longer to sell when compared to last year at the same time. As a result, buyers have more leverage in this segment, making it more of a buyer's market for attached homes. If you have a home or investment property that you're thinking of selling, or if you're curious about its current value, scan the QR code for an estimated home valuation. The results are based on a combination of actual home sales within a certain radius of your home or property. Of course, if you're interested in a more customized valuation, please contact me and I'll be happy to provide that for you. Home prices are stabilizing, however, they are still moderately higher than they were just a few short years ago. In addition to that, interest rates are still more unaffordable than not for many would be home buyers. With that said, let's take a look at some challenges and possible solutions for today's home buyers. Top challenges for home buyers are high home prices, elevated interest rates, and location considerations. A solution to high home prices is to purchase during slower periods. Typically, the end of fall and the winter months is when home sales are slower and even stalled depending on overall economic dynamics. During this period, sellers are more motivated, and this includes new construction home builders. Another solution to combat home prices is to present a rent to own offer to sellers of resale homes. If the seller is motivated or open to other options, you may be able to get into your ideal home at a lower entry point than that of a typical home purchase where a traditional bank or mortgage lender is involved. The third solution to make buying a home more affordable is to negotiate for the seller to buy down your interest rate. In fact, many new construction home builders are currently offering 5% interest rate on new home communities. Lower interest rate means lower monthly mortgage payments. As for location considerations, consider moving away from the city center. Identical homes in the city cost more than the same home that's located outside of the immediate metro area. This option may be ideal if you work remotely or commute a couple of days to work. If you don't want to move outside of the immediate metro area, maybe consider buying a townhome or condo instead of a single family detached home. Attached homes tend to cost less than single family, especially now that the inventory is almost at 6 months for attached homes. A supply A high supply of inventory means that there are more options and leverage for buyers. So there you have it, three challenges and five possible solutions for buyers to turn winter woes into wins. As for property sellers, current challenges include longer days on market, elevated interest rates, increased inventory, and a stall market. Possible solutions to longer days on market include pricing right the first time to avoid chasing the market. An example of this is setting an unrealistic list price and then having to reduce the price after not receiving any offers or real interest in the property. I understand not wanting to test the market at a particular price or wanting to ask a bit more in anticipation to accommodate requested closing costs from the buyer. However, this strategy usually proves detrimental for most sellers. At this point, the seller is left making multiple price reductions with no results. Sellers should also be concerned with unaffordable mortgage rates since most buyers rely on funding to purchase a home. Forward thinking sellers should take a play out of new community home builders' playbook and offer rate buy downs to potential buyers as an incentive. After all, you're competing with new construction communities for the same buyer pool. That said, the third solution for property sellers is to make your home show ready. With increased inventory and newly built homes, you get one shot to make a first impression. Buyers more than likely will not spin the block if the condition of your home is not up to par with other available options. Note that major upgrades or renovation is not likely required. However, basic maintenance, organization, decluttering, and a deep clean can go a long way. When home sales are slow or stalled or stagnant and nothing else is working, sellers should consider creative avenues such as renting to own or owner financing. Another creative and often overlooked solution for property sellers is to sell their home by having the buyer assume their loan if possible. There is some initial effort required from the seller in that permission must be granted from the loan holder, and the type of loan on the property must qualify as one that can be transferred to the buyer. This strategy works best if the interest rate on the loan is significantly less than the rate of a new loan acquired by the buyer. Overall, there are multiple solutions available to property sellers whose home may not be selling due to inflationary market conditions or economic woes. The key is to be open minded and flexible. With affordability being an issue for many would be home buyers, and with so much going on in the financial markets overall, a survey was recently done asking renters their general take on becoming a homeowner in the future. Off the bat, 14.8% said no, they're not thinking about buying a home at all. 25.4% are not sure. 27.4% of renters plan to buy a home within 2+ years, and 32.3% of renters are planning on buying a home within 2 years. Overall, that's about 60% of people have definite plans to purchase in the future, and just over a quarter percent of renters are at least thinking about it. So, generally, consumer confidence and morale is pretty strong when it comes to home ownership. Let's take a brief look at the pros and cons of renting versus buying. Comparing apples to apples, we'll take a look at what it costs to rent the same home versus buying it. A typical 3 bedroom, 2 bath home in Metro Atlanta is around $380,000 to $425,000. With a 10% down payment, monthly mortgage runs between $2,800 to $3,000 per month, and this is including principal, interest, taxes, and insurance. To rent the same home ranges between $2,250 and $2,600 per month. The difference in payment is $400 to $550. Although buying a home may not be suitable for everyone, depending on where they are in their lives, there are times when it makes better sense to rent. Buying a home is the better option if you plan to live in the home long term. When you rent, you have nothing tangible to show for it. If you buy a home, that's a tangible asset that can create wealth over time. Buying a home is also one of the fastest ways to increase your net worth through the equity gained in the property. Here's a look at a few rent versus buy scenarios of cumulative annual cost of renting versus equity gained or wealth building. So, with this chart, if you continuously rented from 2006, you would have spent $268,606. If you purchased a home, you should have about $181,312 in equity. If you've been renting since 2015, you've probably spent around $169,078 in rent. If you purchased, your equity should be around $226,991. If you started renting in 2019, you would have spent about $117,394, and equity gained would be $167,999. And then if you started renting in 2022, you would have spent about $73,090, and your equity gained would be about $65,660. I want to point out that if you do the math on these numbers for what you would have spent in rent, this is conservative. I think these numbers are based on if your rent is around $1,000, between $1,000 and $1,200, which we both know that rent increases year over year. So what you may have paid in 2006 and even 2015 and 2019, your rent would have increased by now. And typically, conservatively, rents increase each year by about 4% in the state of Georgia, and that's a conservative percentage. At the end of the day, it's all relative. Again, if you're currently renting, maybe do the math and on how much you've spent so far. And I'm sure the numbers can be very alarming when we put pen to paper and see what that totality is, what the cumulative amount is that we would have spent on rent. And again, the comparison is to say that if you had purchased, then of course you would be gaining equity and instead of having spent that amount of money and not having anything in return to show for that. Here's a 5 year projection in potential growth in household wealth or equity over the next, as mentioned, 5 years. And this is based solely on increased home equity. If you purchased a home in January of 2025, and the home price, let's say the home price, this is based on a house that you purchased for $400,000. So we can see in 2026, it's projecting that the equity gained would be $9,680. In 27, that equity doubles. And then in 2028, if you purchased a home in 2025, in January of 2025, for $400,000, you would have $30,496 in equity. Then in 29, $45,478. And then in the year 2030, your equity would have grown to $61,381. Here's a look at home price growth for 2026. Everything to the right of the blue bar is home price appreciation predictions from industry experts. The blue bar is the average of all 9 of them, which is 1.7%. Note that there is notable price appreciation even with recent flattening in the marketplace. Current pricing remains well above pre-pandemic levels for both detached and attached homes. There is long-term growth, and the market is basically digesting gains, not giving them back. Home price growth is slow and steady. This means that the market is shifting to a more balanced one. Here's a look at mortgage rate projections for 2026. This chart shows projections from 3 major sources: Fannie Mae Mortgage Bankers Association, and Wells Fargo. Now, all three of them are projecting gradual rate declines and not sharp drops. Rates are currently 6.21%, and they were projected to be at 6.4%. Now, as you guys know, we are on the heels of a government shutdown that ended up actually being the longest in history, and where rates are now, I feel that has something to do with it. So that's 6.21%. I feel that that lower rate is in an effort to increase consumer confidence after everything that was experienced as a result of people being furloughed and laid off as well. Now, back to the chart. This suggests rates are likely to stay in the mid sixes range through, well, that was the projection. It was likely to stay in the mid sixes, but in 2026, by early 26, projections were to move into the low sixes, and we're there already at 6.21. However, um, these are the projections. Now, by late 2026, the average forecast is around 6.1 to 6.2. And again, we're at 6.2 currently. This is all to say is that no one has a crystal ball. Where rates land always depend on economic factors, geopolitical activity, political activities. So case in point, and of course, inflation as well impacts where rates land, as well as the jobs market. Again, these are just projections. So if everything goes as planned, this is where rates are likely to land. I think the bottom line or the big picture is that there will be a gradual decrease, not a sharp drop. So we're not likely to see rates leave the sixes. We're not likely to, right? So, or we're not likely to see rates drop to 4%. We're not likely to see rates drop to 5%. I think that most of us, we are beginning to realize that this is the new norm, that mortgage rates will more than likely have a six in front of it. And at the very least, if we're lucky at some point, we may get to the high fives, but we're not there yet. For the next year, we are projected to see mortgage rates with a six in front of whatever is behind that. Let's recap. Atlanta housing market trends found that the average price for single family detached home is $564,569. Average days on market 46. Month supply of inventory 3.9. Sellers are receiving 97.9% of their asking price. As for condos and townhomes, the average sales price is $406,219. Average days on market 57. Month supply of inventory 5.6. Sellers are receiving 97.5% of their asking price. As for buyers, they can turn winter woes into wins by purchasing a home during the late fall and winter months. Sellers are more motivated during this period and often offer additional incentives. A few fun facts. Fun fact number one, many new home community sellers are currently offering 5% interest rate. Fun fact number two, some new home community sellers are offering delayed payments. This means that you can move into a home right now and not make your first mortgage payment until a future date in 2026. Fun fact number three, LendingTree found that January buyers paid about $23,000 less than home buyers who purchased in May for the same size home. Impactful ways property sellers can turn winter woes into wins is by offering a rate buy down to potential buyers or having the buyer assume their current or the current rate on their home loan, which can be a significant savings to the buyer. Despite financial and economic challenges that unfolded in 2025, 60% of renters have definite plans of buying a home in about 2 years or so. We also determined that in Atlanta, although renting may not be for everyone, the rent versus buy dilemma proved that renting offers short term flexibility. However, buying a home wins on stability, wealth creation, and long term cost control. If you purchase a home in January of 2026, your potential equity gained by 2030 is $40,000 to $50,000. As for Atlanta housing market outlook or housing market outlook for 2026 overall, home prices are expected to appreciate by 1.7%. This indicates that the market is well on its way to a balanced one with slow and steady growth. Mortgage rates for 2026 are expected to adjust to about 6.27% by the end of quarter one and trickle down again in Q2 and 3, landing at around 6.18% in Q4 of 2026. When it's all said and done, as we know, with interest rates, there's no real prediction, just projections based on market data. Always, it's my goal to provide you with accurate information from trusted sources so that you can make the best decision for yourself and your family. If you are in the market to buy or sell a home, don't forget to download your free home buyer or home seller guides. Just scan the QR code and you will have that delivered directly to you. And I want to take this time to say thank you to anyone who's ever liked any of my videos, shared it. All of my subscribers, I thank you. I appreciate you spending a bit of your time with me to listen to what I have to say and get my take on the market. And happy holidays, season's greetings to each of you, to everyone, anyone watching right now or in the future. Take great care and the very best in the year ahead. See you on the next one.